Good morning and welcome to the ADA Securities Markets Update. Beginning with the Asian session today, there were a collection of economic releases from New Zealand, Japan and Australia, which had a notable impact on Aussie, Kiwi and the yen across the session. Beginning with in New Zealand, the Reserve Bank of New Zealand left the official cash rate on hold as widely expected at 3.5%. However, the bank noted that more tightening is likely to come in the next few months. The Reserve Bank of New Zealand Chairman Wheeler said that he is concerned over the housing prices inflation. Moreover, the bank reiterated again that the Kiwi exchange rate remain unjustified and unsustainable, and they expect a significant drop in the Kiwi exchange rate over the coming months. The Kiwi spiked across the board during the Asian session, while the Kiwi dollar advanced to as high as 78.70. Of course, our short trades were stopped out yesterday overnight at 0.7808. However, there is a new selling area has developed already between 77.98 and 78.39, while the stops are reported above 79.33. On the downside view, we are still looking for another leg down toward or below 76 over the next few weeks. In Japan, the machinery orders came in, or the core machinery orders came in worse than expected, declining sharply by 6.4% in October, comparing to a rise of 2.9% in September, while the estimates had been anticipated to decline by only 2.1%. This is the first and the biggest monthly decline in 5 months. In Japan, the Japanese yen again continued to rise across the board, while the dollar yen slipped below or to as low as 117.60 so far, and the correction is likely to continue in the next or the coming week, and may test 115 areas before the uptrend continues. In Australia, the jobs report came in with mixed outcomes today. The employment change added or increased by 42.7 thousand in November, comparing to 13.7 thousand in October, while the estimates were to add around 15.2 thousand new jobs only. The unemployment rate increased or ticked higher towards 6.3%, up from 6.2 during the same period as widely expected. This is also the highest unemployment rate in almost 4 months. The Aussie advanced almost across the board today, except against the Canadian dollar, while the Aussie dollar advanced or spiked as high as 83.76 before easing some of these gains back toward 83.20. In the meantime, a new selling area has developed again between 83.82 and 84.20, which would be seen in the ahead of the weekend. Going forward to the open session today, we will be focusing, or we will be waiting for a few economic releases and events across the session from Switzerland, the Eurozone and also Italy, which may have a notable impact. Beginning with Switzerland, the Swiss National Bank is expected to keep the current policy unchanged. However, all eyes will be on the monetary policy assessment and the press conference to see whether the bank will intervene again to support the Euro Swiss again, as it remains below or remains around the 1.20 floor. In Italy, the industrial production is expected to rise slightly by 0.3% in October, after a sharp decline of 0.9% in September, which would be the second monthly or the biggest monthly increase in 2 months. Finally, the ECB will announce the total value of the money that the ECB will use to loan the Eurozone banks today. The estimates are around 148.2 billion euros, comparing to 82.6 billion euros in late September. Going forward to the US session today, we will be focusing on 4 economic releases across the session. Beginning with the retail sales, the estimates are to rise by 0.4% in October, comparing to another rise of 0.3% in September, which would be the biggest monthly increase in almost 3 months. The core retail sales, on the other hand, the core retail sales is expected to rise by 0.1%, comparing to a rise of 0.3% during the same period. However, this is the second monthly increase in a row. The US jobless claims is expected to rise slightly toward 299,000 last week, up from 297,000 the week before. And finally, the business inventories is expected to rise slightly by 0.2% in October, comparing to another rise of 0.3% in September. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.